Of the roughly 135 million Americans who file tax returns, a whopping 2/3 of them pay for help. But whether you go to a big franchise like H&R Block or an individual CPA, chances are you're getting less than you bargained for. Here are 3 things your tax preparer won't tell you. Less than 1.5% of returns get audited, and while that might pacify you, the taxpayer, audits are the primary way to catch bad tax pros. Tax preparers aren't exactly under a microscope, but their violations are public information. To find out if your CPA has been disciplined, visit the website of the American Institute of Certified Public Accountants. What does it take to call yourself a tax preparer? That depends. Most states don't regulate or license tax professionals. In fact, only California and Oregon require licenses if the preparer isn't already a CPA, enrolled agent, or attorney. While licensed preparers take tests and meet ongoing education requirements, unlicensed preparers do neither. In general, that's fine. Many unlicensed preparers are perfectly capable. But in the event you're audited, they can't represent you before the IRS. At this point, you might be inspired to prepare your own taxes, and it's not a bad idea. After all, the IRS found that 56% of professionally prepared returns showed significant errors, compared with just 47% of those done by the taxpayer. To be fair, tax preparers often see more difficult returns, which could lead to more errors. But if your return simply involves a W-2, mortgage interest, and a few dependents, you're fine doing the job yourself. For the remaining 7 things your tax preparer won't tell you, check out the 10 Things section of SmartMoney.com. For SmartMoney TV, I'm Rachel Solomon.